The U.S. dollar index declined 7% in 2020. What is the outlook for the greenback in the first part of this year?
So it looks like the same fundamentals that we had late last year will continue into the beginning of 2021. So that is, of course, the rising U.S. debt levels and the interest rates in the U.S. that are likely to remain very low for quite some time. Probably not until 2023 will the Fed be able to raise rates. So all of that suggests that there will be follow-through weakness in the dollar index in the first part of this year.
What are the January rules of thumb for stock index futures?
The January rules basically say that the way that stock index futures trade in the first day of the year, the first week of the year, and the first month of the year indicate that there will be continuing trends in that direction. Now, so far today, we did see stock index futures starting out higher, coming under some pressure, so we'll see if that rule holds up as far as the first day of trade. My own particular analysis focuses more on some of the fundamentals, namely low interest rates. So my near-term outlook, regardless of what the January rules may say, at least for right now, suggests that there will be some follow-through gains in the stock index futures.
What is the outlook for the yield curve, and how will this impact the interest rate futures markets?
So the fundamentals last year indicated that the yield curve would continue to steepen, and I think those same fundamentals are present in 2021. So I believe the yield curve will continue to steepen with interest rates at the long end of the curve advancing versus interest rates at the short end of the curve. That suggests futures at the short end will probably hold up steady, while at the long end of the curve, namely the 30-year Treasury bonds, will continue to decline. So this is a trend that I think will last for quite some time. So either be long the short end of the curve futures and short the bonds, or just outright short the 30-year Treasury bond futures.
Rallies in grains have continued into 2021. Why? Will it continue?
Overnight, we saw soybean and corn prices sharply higher. I think part of it had to do with dry weather across northern Brazil and the forecast that we're going to see dry weather in southern Brazil and Argentina. That'll affect their final crop numbers and increase maybe the demand for our corn and bean exports, tighten our balance sheets, and push prices even higher. I think that we do go higher. I mean, the first objective right now is $14 beans and maybe $5.50 corn. We're going to see some volatility. We're going to see some big moves one way or the other, depending upon, number one, if the funds want to increase their overall positions, and number two, what the USDA says in January, and then number three, what the weather is in South America.
What is the latest managed fund position?
The funds are along almost 240,000 soybean contracts, almost 350,000 corn contracts, 100,000 meal, and 100,000 oil, and they are long about 20 or 30,000 Chicago wheat contracts. These are record positions, which means that the commercial has a record short position on. So I think that they will increase their long positions on new positive news. The three news could be new demand from China for U.S. corn and beans, and anybody coming in and buying U.S. corn. Number two is continued dry weather on parts of South America. And number three, the USDA finally lowering their corn and soybean carryouts to levels which private analysts think they should be and what we're trading.
Will USDA January report push prices one way or the other?
I think the USDA will try to remain conservative. There's still time for the South American crops to get rains and kind of turn things around, which means that they might lower, let's say, the 175 bean carryout to, let's say, 150. And they might lower the 1,700 corn carryout maybe to 1,600. Again, that is above what the trade is trading, which might be just a little bit negative.
Due to COVID-19, the normally in-person ADMIS broker conference will be virtual sessions this year. Can you tell our viewers a little more about it?
ADMIS is going to have a virtual webcast broker meeting this year. On January 13th, ADM CFO Ray Young will be talking about the outlook for ADM. And ADMIS President Tom Cadillac will be talking about the outlook for ADMIS in 2021. Then on January 19th, Dan Vossi will be talking about the ag outlook, and David Hightower will be talking about the outlook for financial, energy, and the rest of the markets. He'll be putting out some trade strategies for 2021. And then on January 27th, we have a speaker that's going to be talking about how to get sales up in this new economy. I think the main thing right now is getting the vaccine inoculated around the country so we can put COVID behind us and move forward as far as rebound in our economy. All those meetings start at 3:15 Chicago time in the afternoon.